The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, welcome on back here to the Diagnostic Trading Hour, and I am your host, Darrell Martin, and just like we said yesterday, if you're listening on the show, if you're listening when I was over on Tommy's show later in the day, today was going to be crazy, and I think we're right. So it's definitely been a crazy, volatile day, and I went through a variety of possible trades you could take advantage of, and oh my gosh, there were so many ways to take advantage of the market today. If you have any questions, give me a call. You can reach me live at 1-877-927-6648. Again, that's 1-877-927-6648. And call in live right now. All right, so let's go ahead and check out. We got a lot of red going on right now. We got the S&P down 8 points. We have the NASDAQ down 12. We got the Dow down 86 with the Russell down a little over 6 points right now. Gold is down $6 as well. Copper down about a third of a percent, and silver down over 1.3%. Corn down 9.5 points, which is also 1.3%. Soybeans literally right now flat on the day. You got oil down 75 cents. You have natural gas down 2.6%. Massive move on natural gas. Eurodollar down 128 pips. So we talked about this. I hope you took advantage of it. Pound dollar up 38 pips. Aussie dollar will do that one down 33. U.S. yen down 21. U.S. Canadian up 36. U.S. franc up 67. Dollar index in positive territory, obviously against basically, well, just about everything. The only thing in sort of the contrarian pair lately, U.S. yen. Dollar's a little weaker against the yen at the moment. And so, that's pretty much where we stand right now. And, we'll go through. And a lot of those moves don't even really tell the story. So we're going to get to go back and pull the charts and looking to see what's been happening on gold and all the really cool setups that have been coming across the board. So let's look at gold. Gold's always fun to trade. And I'll pull it up right here.
Come with us
on the charts, and we'll look at the setups because it gave us some sweet, nice setups today, and I'll walk you through that. So give me 1 second while it loads on up, and we'll go into some of the fundamental reports that came out, how you could have tied all that stuff together, and all right. So here we go. Looking at the gold charts and expand this up a little bit here, make it easy to see. One of the things you want to be looking for whenever you're trading gold or trading really anything, is just a simple RSI divergence, okay? And so let me pull up that right now. So we got the gold chart, and we got RSI, just the standard RSI, that's it. And right here, I'm going to put in the high, and see how we have new high, new high, new high right there, okay? And then right here, so we're making lower highs, still lower highs over and over again, lower highs right there. So you're getting new highs and new lows. All right, so I got higher highs on my price action, and I got lower highs on my RSI. That means be aware, okay? Be aware that the market is probably about to flip around and go in the other direction, all right? And we can see, we got a few bumps right there, very tight, but a few bumps right there over and over again. And then finally it does turn around. And you're able to go in and take a short, so you could have been going into, how would you have done this? What if you would have done this earlier this morning and it just oscillated on you? But finally it came in. And there's a lot of different ways to time that trade. I'd be looking to get in right around here. But let's just say you didn't have all that put together, Well, you could do it by trading on Nadex. And we could go in and actually short on the Nadex exchange. And so if you haven't already, hop on over to TFNN.com, click on the Nadex banner, okay? and then click on log in. If you already have an account. If you don't have an account, click on our products and at least sign up for a demo account. It takes 15 seconds. Okay, put in your username, first name, last name, phone number, email address. Click apply for demo, and you'll get an email with a password, and it takes about 15 seconds. Okay, and you can log in with that, and then you can also create a live account. You get about 2 weeks on the demo, and there's a way to get that demo extended. So just email me. I'll let you know how that works. Okay, my email address is right there on the website. I'll let you know how to extend your demo way past the 2 weeks. But to create a live account, click start, and it only takes 5 minutes to go from start to funded, and you can actually trade. So it's always good, of course, to learn on demo, and there's a lot of great information, tutorials, all that stuff on here. But if you really want to learn how to get into it, and you want to learn how to use these boxes, like I'm always talking about, how to use these binaries, go over and check out the box spread analyzer, get access to the deviations. All this stuff works so well. And I mean, you can see how it'll hop over here and it'll hesitate. See how this bounced? It's treated that like a support until finally it broke it. Then it comes down to the next level and does it. And I mean, it just does this over and over and over again. It makes trading so much easier because everything's based on just statistics, based on implied volatility. And that's one of the things I think that I'd say 99% of traders, and that's probably underestimating the number, don't use statistics in their trading. It sounds too complicated. Now, I've never personally taken a statistics course in my life, okay? So I'm not saying you need to know statistics to use statistics, okay? So you probably don't know how to calculate half the indicators you use on your chart, all right? So now I've been taught, I guess you could say, one-on-one how to do things like this right here, like implied volatility-based deviations, which is what this is. But you can see how it came down to one deviation. I mean, it just spent forever there. So we're going in 9:18, but basically spent 45 minutes just hanging out before it decided to take off. And did you have a clue on that? And I mean, you can go in and you can look at a lot of different things, but yeah, you had the exact same clue. What was the clue? Look at this, RSI divergence going up. Got it again right here, going up. Okay, so that's going up. And what do we got going on over here? We got lower lows, getting lower lows again. Right? So right there. So divergence over and over and over again happening. So giving you a clue that, you probably don't want to keep going short. What do you have at your favor? Well, you just dropped a full deviation. We don't expect it to go more than a deviation. Now it does. It does. Sometimes it goes 2. Every once in a while it goes 3. Occasionally, really rarely occasionally, like less than 0.3% of the time it goes more than 3. But, you want to be really cautious when you're seeing these things happen. And I'm not saying you just go like all crazy and reverse just because it hits a 1 deviation market, just because you see an RSI. But I'm going to start looking for, when I see this RSI divergence, I'm going to start looking for a reversal. I'm going to look for some confirmation on the trade. Okay? And once I get that confirmation, then I'm going to go in there and I'm going to buy. And once I get the confirmation to this side, I'm going to sell. Okay? And it just basically helps me take a better signal on whatever system I'm using. You can use any system you want to, but whether you're using Fibonacci analysis, whether you're reading, different candle patterns, whatever method it is that you like to use that's working for you, because you got to make it, in the end, you got to have a strategy, whether you're using binary, spreads, futures, forex, stocks, whatever, okay? You got to have a, whether you're just buying them or straddling them or strangling them or, covered calls, married puts, whatever combination you're doing. That's your strategy. Your system is, what are my rules for entry and exit? Just my basic rules. And then your style is how to read the market. So that's like the divergence. Style is really important. It tells you when to turn on and off your system. Okay? So when I see a divergence like this happening, that says, don't go short anymore. Don't sell. Okay? Stop selling. Until this divergence stops happening, stop selling. Okay? So I don't take any of these trades right here. And like that have been 1, 2, 3 losing trades in a row. I mean, they've been really small after some major wins, but either way, I don't take these trades because my style said, stop your system, turn it off. And you can't just have a system running on autopilot, Autobot, okay? You see all these bots out there and, they never work. It's because they're systems. They don't have style factored in. And so style is something like an RSI divergence. And that's a programmable thing. And I'm even working on getting that program for myself just to make it easier and faster. But, I mean, it's right, you got to know when to turn the system off. Now, here's another clue for you on when to turn a system off. And I think I had a conversation with a trader. They sent me this long email. It was really, really, very honestly moving. and very just standard of what you hear with a lot of traders out there in the market. And they were going through, and I'll go ahead and post the deviations while I'm going through this with you. And they were just talking about how they took this course from somebody and they did pretty well, and they made quite a bit of money, but and they quit their job, and then all of a sudden they lost a lot of money. And the system just went through a major drawdown period, and now they're trying to figure out what to do, and they feel really lost. And I looked at the drawdown, I was like, oh my gosh, because they just kept going and going and going. And one of the things that you can do, and it works really well. Okay, I'm going to put this. I have a new book that's going to be coming out, and I'll be putting it in there, talking about it in more detail. But is you can go in and you need to chart your equity graph. Okay, so I don't know if you know what an equity graph is, but it's basically looking at the size of your account based on the system. Now, I'm not talking. Now, if you have 4 different systems, make an equity graph for each system. Okay, so you're tracking the profit and loss on each system that you have, and you can build it in Excel. It's really not that complicated. Okay, and then you put a moving average on it. By doing this, then what happens is when the market drops below the moving average, you stop trading in your live account. Okay, because that basically means that the market has changed faces. It's not looking at you anymore for that system. It's looking to the right or the left. And you have to stop trading it in your live account. You can, however, and you should continue to trade it in your demo account. Now, this requires discipline. And if you don't have discipline, then you're going to go from having a $60,000 account to having a $5,000 account, okay? To having a no account. But this would, you go from 5 to 10 to 20 to 30, 40, 50, 60, and all of a sudden it starts dropping down and hits like 55, 52. You turn it off. Then drop down, drop down, drop down, drop down. You're trading demo. Maybe you're trading it for a day. Maybe you're trading it for 5 months. But you're still trading it. But when that system kicks back in, which it will because the market goes in cycles, and so you're still putting the trades in on your equity chart. You have your demo trades and your live trades. When you put all your demo trades, real results, just like you'd be trading it live, back in on the equity chart, and that comes back above that moving average, okay, then you can turn it back on. And yeah, you may have a little chop like right when it's breaking above it. It's sort of like you lose the winning trade, you get the winning, you lose the winning trade because you don't get in, and then you take the losing trade, but then it breaks above it. So you may have a little chop, but I can guarantee that little chop for a few days is a whole lot better than a losing streak for 4 months, or sometimes even 1 week can wipe you out, depending upon how you trade. So using that equity graph is a massive benefit and will let you know when to turn a system on and off. But you have to have the discipline to keep putting in the trades in the demo account, just like you're trading it live. And that's why it's good to have more than one system, because sometimes you'll have every system firing off at once. Other times, one system's working and one system isn't. And that sort of can help you keep trading. But, all right, just a few clues there. We'll come back. We'll check out some more stuff in the markets, talk about some of the things that came out this morning. We'll get right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, let's go ahead and pull up a few more things for you. And what I wanted to show you right here was, okay, so we're looking at this chart right here on gold. We're short right now. And we have our, entry defined. We have our stop defined. Now we need to have our take profit in check, okay? So now you could have took profit, of course, at like just the next half deviation move, because you got a great move right there to a half deviation. Maybe you want to write it a little bit further. So one of the ways to do that is I like to have up simultaneously. Now I know it's a little bit of a pain to have two different charts up, all right? So because maybe you're trading 5-minute bars or Renko style bars, or you're using Heiken Ashes, or who knows what you're using. But I like to have 10-minute bars up. This has just consistently worked well for me, and it's what I prefer to do. And I mean, you can tighten it even more, but this is one of the ways I like to do it, where I have the 10-minute bars up, and the bar that closes below the next deviation level, then that becomes my stop. Okay, so if I don't have a tighter stop already, so like right here, if I go on, I go, okay, well, what was the high of this bar? Gotta unclick everything. There we go. The high of this bar right here was 1674.2. So I can go over here and go, all right. Then what I want to do is I want to go to 1674.2, which actually is going to be pretty much right at the same price anyway, that I already have my stop at. But right there, okay, 1674.2, and that's what I have right here as well. So that actually lines up. That's great. It's what I call power line. It's like the last pivot before I had a confirmed, basically retracement and pullback. So basically alert, pivot, entry, confirmation. So right now I'm waiting on another one. If I get another one, I can tighten it again even sooner. Or if I close below the 0.7 deviation mark, then I can tighten it again. Now, you don't have to be watching this all the time because it's pretty simple. I mean, as soon as you see on whatever chart you're looking at that it does actually go below the bar, then you know, hey, I can hop over to look at the 10-minute bar real quick and tighten this up. So I'll be looking to tighten it again when it hits this bar, or if I get a confirmation on what I'm doing right now, then basically I'll put it down to 1673 and just keep tightening that, because I mean, you want to let your profits run, and you want to cut your losses short. So what this does, it allows me to have very tight stop losses, and it allows me to have confirmation on my direction. Also allows me to let my profits run, so I can maximize my profits. So on this trade so far, with the entry looks like right up here at, what would our entry price be? The low of that 1680.2, 0.3, 1680.3. So, not too bad. So about up, almost 9 points right now on the trade. And so that's $900 a contract. And pretty simple, pretty easy trade to do. So, but that RSI is what gave you the big clue. It's what gave you the, hey, let's get started now. And it's the easiest trend reversal thing that I know of. And I'm sure there's some other great ones. And if you know of any, feel free to share them with me. Email them to me. I'll look at them. I'll battle test them. I'll see if they work out. And, one thing I can definitely tell you is I'm always trying to improve as a trader. And, I'm checking out Larry Pesaveto's stuff, and I'm trying to just master the Fibonacci's. I'm checking out Tommy's stuff to master volume and the fibs, the way that he does the Tiger Gartley. And, I'm going over and I'm checking out Steve's stuff, and I'm learning how, he deals with all the chart patterns and the ways that he looks at entries with the Gartleys. And I want to always improve. And I think there's, always room for improvement. I just got to make sure it ties into my system, ties into the way that I do it. Because I think every one of us, you listen to all the shows on here on TFNN, we all have our own style of trading. And, but all of us constantly want to get better. And so just challenge you that, it's not so much, you never try to, arriving. It's a constant journey. And the arrival, that's the trades you do every day. But it's just a journey. And that's part of the fun of trading, is it's not just ABC, walk away, never learn anything. It's constantly growing and adapting to the markets. And the markets are definitely a living beast. And so you do have to adapt to them. And the things that work, though, work over time. They work now. They worked 40 years ago. They worked, yesterday, and they'll work tomorrow. And they'll work on multiple time frames. And so that's one of the things I challenge is, constantly be growing. And, I'm always looking to figure out new and different ways. So if you see something that's working consistently for you, or that you're, checking out, feel free to let me know about it. I'd be glad to hear from you. You can send me an email. You can call in, anything like that. And I definitely look it up. All right, so that wraps up our sort of look on gold right there. Let's do a walk through. I'll leave the deviations up so you can check those out. Remember, you can get access to these every day. They posted around 7:30 Eastern time at night, about 7:15 Eastern time. So, and we post all these levels up. And like I said yesterday, we just added the ability to go in and now highlight, and it'll show you what contract, if you're trading Nadex, what contract the Nadex contract is following. And we broke out the Forex individually, and we broke out the futures. So even if you're not trading Nadex, we now have all the futures, front and back month, built in here. And we're going to be adding more and more. We'll have, I think, about 40 futures when we're done, and about 3,000 stocks and ETFs and indexes. So check that out if you haven't already. I'll leave this up. I'll come right back, and we'll wrap up the fundamental side of trading. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We're going through a few different things and just checking out the fundamentals right now. We just did a little lesson on how to know when to turn a system on and off with using a simple equity graph of your trading system. We also talked about using RSI to help you identify reversal points, and we went through using deviations to help you define where you want to put your stops at. And all those can be very, very helpful, basically in the whole grand scheme of trading, period. Just because you need to put all those pieces together to have an effective trading plan to let your profits run, to cut your losses short. And, if you're ever going to be sort of counter-trend trading, I mean, something like the RSI is something that you need in your place. But, again, not just that. You need some other confirmations as well. But that basically is my first, warning light. Like, that thing sounds off, and then now I'm going to start looking for a good entry that confirms the direction. And one of the simple ones that you can use on any trading platform is just something like the 8 EMA. So you go on exponential moving average, put the 8 EMA on there, and just make sure the bar is closing below it or above it. Below it if you're looking to go short, above it if you're looking to go long. Just because you have that RSI, make sure you get that reversal on there. And that should help keep you out of a lot of bad trades all by itself. So it helps you not fight the trend. So one thing I can notice that you could look at right now, let's see if I can pull this up. And we can look at any other possibilities. Okay. All right. We'll go ahead and let's do a wrap on the fundamentals. We talked about a whole bunch of them last night and yesterday. We had the employment change and the unemployment rate last night on the Aussie dollar. I hopped in. I traded it. The last 2 nights, man, knocked it out. Retail sales, boom, interest rates, no problem. Easy, quick trades. This one, it moved, but the problem is the numbers were positive, but the report itself was mixed. So there was good and bad that came in the actual details of the report. And so it popped up, then it started flying down, and it popped up. I'm like, all right, this is going to work out great. And let me pull up a chart on here. I'll show you through what was going on the Aussie. And we'll move on over here, pull this up, see if this is going fast enough. If not, I'll just load up. There we go. All right, so we got that chart right there. And the report came out last night, okay, right around 7:30 Eastern time. So that put us at 19:30. And so right here is when the report's, coming out. All right, let me do this a little easier. So right there is when the report comes out. And you can tighten it down to 1 minute, because when you're trading news, usually I'm getting pretty tight. On my bars, I want to look at really, really small bars on the news whenever it comes out, just because, it's moving fast. And 5 minutes is going to be a little too late. All right, so right here, yeah, there we go. We got a little more specific, too. We have the report coming out at 7:30, okay? So right here, it goes down a little bit, but the number comes out positive. 10.4 thousand on an expectation of 5.8 on the employment change. And that's the number of people employed during the previous month, so the number went up. And then the unemployment rate went down from 5.5 to 5.4. Well, all that seems really, really good. And the market starts flying up, and I'm like, sweet. All right, I'm not surprised by the little shock and awe right here, right at, the beginning. It'll pop up, pop down, pop up. That's why I went trading Nadex, because you don't have to worry about getting stopped out when you're trading news. But then all of a sudden this starts happening. Now I'm strangling, so I don't care if it goes up or down. I just want it to go, okay? But this starts happening right here, and really, we didn't get a major move till late in the day. But and so I'm like, what is going on? We did actually finally get a 1 deviation move, but it took forever. And when I read the report, then I saw a few things. Okay, employment increased, but unemployment also, increased. The unemployment rate stayed steady according to their projections, 5.4, okay? And they consider that to be steady because that's what it was last time. It was 5.4 last time. Remember I said you want to look at not only how the number came in compared to expectations, but how did it come in compared to the previous number. So came in steady. Well, that's positive. I mean, it's not negative completely. But unemployment actually, increasing is not a good thing. And they weren't really reporting that number. They're reporting the employment increase, not the unemployment increase. So you got positive and you got negative happening at the same time. And then you got the aggregate monthly hours working decrease. So people are working less hours, which means they're making less money, which means they have less money to spend. Okay? So you have these positive numbers coming in, but you also have these negative numbers coming in when you drill it down. You're not going to see it just on the regular 2 numbers. You have to actually go to the report page and look at it. And so once I go in and look at that, I see that, and it's moving down. And I mean, I'm not really even that worried about it at first. And then, it keeps going and going. And I'm like, okay, well, I guess something else is going on. And there definitely was something else going on. And so it comes down here, and I'm up quite a bit. I mean, I'm up a decent amount. I've recovered all my risk on the short side. I've recovered about 2/3 of my risk on the long side down here. And but then it stops and it starts retracing back up and it starts going flat, basically waiting on all the news. And this is the conclusion came to. It's hindsight's always a lot easier. But really nothing happening until the major news came out this morning, and with all the reports. And finally, Aussie dollar decided to wake up and realize what really happened in the report. But and so I got out literally right about here, okay, which means I didn't really take a loss on my short. My long didn't actually did take a loss. Now we're talking, I want to say it was like about $22 total. So I mean, I lost like $12 here, and basically didn't lose anything on this side. So per contract. So it wasn't a big winning or losing trade. But a couple things I learned is, of course, whenever that comes out, you got a mixed report like that. I mean, as soon as I saw that first uptick on the way back up, probably would have been a good idea to get out. But, when it came over here, I was going to get out anyway, but then it basically expired because it expired at 10 o'clock. So it got me out no matter what, which actually is good, because if it would have kept going up and going down, wouldn't have worked out as well. Now, by the end of the day, it would have made quite a bit of money if I would have had one on that expired the following day, like if I used binaries. But, I like to get in these trades and get out of them, and usually the spreads give me a better risk-reward on the trade. And so that's what I go for. But, that trade worked out okay. I mean, at least, if we would have done pure binaries, short-term binaries, we would have lost on both sides. So the spreads actually worked out much better. And I used the spread analyzer to help me find it. So I just hopped over here, went to spread scanner, and then basically went in, and it immediately shows me risk-reward and everything else, and time to expiration, and I can find the best spreads available. Makes it very quick, very easy. So versus trying to dig around on the Nadex platform, which can be very, very confusing to say the least. Just because you're going through, there's so many choices. It's not even a knock on Nadex. It's a great thing. They have over 2,400 different contracts available for you to trade every day. Okay, so I mean that's awesome. At the same time, that's overwhelming. And so and I hear this a lot of time from traders. I'm always posting on forums and checking things out, and they're like, I was going to try it, but I found it so confusing. But now that I understand it more, I'll go through, I'll explain it. Then I'm going to hop back on there, and it's just. You got to go in and you got to look at what all the different choices are, and people, they see like this right here, and they're just overwhelmed. What does that mean? What do I do? They're used to buy or sell, and so I mean, it takes a little bit of education, but I'm telling you, like the learning curve is maybe a few days to a couple of weeks, and that's if you're on your own. I mean, it could take longer, but we have tons of education you can take advantage of, and it'll really help speed the process up for you. So I highly recommend that you do take advantage of that. Right there. And so we go on that one. Now, we had some other trades that came out as well. So let's check a few of those out and see, what would have been the sort of the best for us to look at. So I called that one out and said, hey, check this one out. It worked the last 2 nights. Didn't work out as well last night, but not, like I said, not a total loss on that trade. And then going over and looking at Thursday, I'm like, okay, well, we got the pound dollar coming out at 4.30, and we have their interest rate coming out at 7. Okay. So, and the European interest rate coming out at 7.45, and with their press conference coming out at 8.30. Now, usually the press conference has the biggest impact, but a lot of times you want to hop in on that rate, because what if they do change it unexpectedly, and then there's the massive move, okay? So let's go look at a couple of those pairs real quick to sort of see how they played out, and then a couple other ones that I talked to you about. We'll look at that. So we pull it up right here, and we got Aussie dollar covered. Let's check out the pound, and here we go, pound dollar, and that'll take just a second to load up there, and if it takes longer, because I got a lot of different things feeding into it. So pound dollar, and the announcements come out. Like I said, we had the 4:30, the manufacturing production report came out, and so you can see that was a pretty decent move right there all by itself. Moved over here. If we go in, well, we got a 1 deviation move just off the manufacturing report. So that was the 4:30 report. I mean, that was probably the best move of the day right there on the pound that you could have taken advantage of. And perfect strangle or on daily binaries or straddle on spreads. And, I mean, it went fast, too. So in 5:13, it moved over a deviation. So you're talking in less than 45 minutes. And there would have been a spread that you could have put on that would have expired at 7 a.m., so would have been a perfect trade. So log that one next time. Manufacturing production report. Okay. When does it come out? Well, the next release will come out on March 12th. So that's one of those things. I'm always building these trades up for you, letting you know about them. Start making a log. Start making a book. Start keeping notes. Have a calendar. Have a iCalendar or an Outlook calendar or whatever, and just start noting as you see things what happens, and keep that report. Go, okay, manufacturing production pound moved a deviation in 15 minutes. And then look at the next report, March 12th, 13th. So take that over. And then you can, even if you don't go back and do the historicals, which I recommend you go back and look at all the historical reports, but if you don't do that, make the notes on what happened today, and then schedule that for the next time the report comes out, which is March 12th. So you'll have that note up. And then March 12th, when it happens, you log the note, and then you schedule for the next time. You just keep rolling these forward, and you have like an insane amount of trades just constantly coming your way. So, all right, so that gives us that one. And then pound then later had its had one of the governors speak at 4:45. That really didn't have any impact at all. Right there, or you could say maybe that was the impact, whichever one you want to blame it on, the manufacturing production or the governor speaking. But apparently he didn't soothe anybody's heart. And the market ran up on the pound, which gave the pound strength, but then it wasn't enough to just keep it rallied, so it wasn't necessarily all that great. But the manufacturing production report was positive. That's what drove the market, and people just waited to see what the governor was going to say. Governor Designate Carney, or Designate Carney, I don't know how you say his name, but or Governor Designate Carney. So that's what it is. Sorry, going in, there's all these different names. You're always trying to figure out what it is. Mark Carney is the actual guy's name. And he came out and did his little speech. And a little bit later, then we actually had the official rate statement, bank rate. That came out at 7 a.m. right about here. Okay. And let's see here. Throw that on. So right about 7 a.m. And everybody expected it to be where it was, and it stayed where it was, and nothing happened. Just went flat all day. So that was your play. And like I said, I talked about, you could get in before the rate statement. The best one is to get in earlier, because that way you can capture both potentially. And if you capture one deviation on a move, you probably don't want to go try to capture another one deviation. Call it a day on that product, because it probably won't move back in your favor again. You can always do it if you want to, but one thing is, when a news announcement comes out, give it 15, I'd say 45 minutes max, and be looking to get out pretty shortly after that. So if you're really not seeing it move in your favor, and you can get out with any kind of less risk, or less loss, or even a small profit, or whatever, a break even, if it's not moving, get out. I like to see it in 15 minutes is what I like to see. But sometimes if it's not 15 minutes, I'll just hop out too. All right, so that gives us a 7 a.m. thing. That covers the pound for us. We also have the euro. Okay, so that was, of course, the massive mover of the day. Hop on over here, and I think we've had 2 deviations or whatever so far on the euro. Yeah, 2.5 deviation move, if you can count the half up and the 2 down. So it's massive. And let me look at that. It's right there. Goes down, hesitates at half, hesitates at 0.7, hesitates at 1, hesitates at 1.5. So if you're a scalper, do you see where you might want to scalp? Look at this right here. talk about scalping heaven. Okay, so it literally stayed up here for 5 hours. So I hopped in and just grabbed ticks after ticks, pips and pips and pips. So over and over and over again. So you had that set up. But let's look at the news, the reason we were actually looking to trade. We got a little bit earlier move, 3 a.m. And there was a few things that came out. You could have blamed that on the foreign currency reserves over in Switzerland or whatever. But the big news, of course, coming out later. Minimum bid rate got released at 7:45. So we can see right here. That came in at expectations, but as soon as it came out, we didn't see a big move. But then what happened? Like tick, 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 starts moving. All right. Then we had the ECB press conference coming up at 8:30, and gives it a few minutes, lets him open his mouth. Draghi talks, and bam. Okay, and then starts flying down. So you had a couple great opportunities to get in. There wasn't much of a move on the bid rate. There was definitely a great move on the press conference, and so you could have went in and strangled that, straddled that, shorted that, however you like to trade. But we talked about a lot of volatility, and it definitely, this basically the euro dropping strengthened the dollar, pushed the markets down. So you put all the correlation together. And so that's your euro dollar trade. We had the U.S. Canadian go over here. So I'm just doing a wrap up, and I've talked about all these trades yesterday. So this isn't just backwards, but I'm saying, hey, look for this. So we'll go back, we'll pull U.S. Canadian and gold, because those are the other 2 trades that you had this morning that you really should take advantage of. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back, folks. Checking things out right now. Looking at the USD CAD right now, wrapping that one up. USD CAD went ahead and popped up one full deviation. It took its sweet little time right here after that report came out and caused some major hesitation. I mean, this thing just sort of popped up, went down, popped up, went down. I'm like, this ain't going to go anywhere. Then it finally does take off. Went on up to a full deviation before it stopped and pulling back. See the accuracy there? Very nice. Helps you tighten those stops on those trades. And then looking on over, so that's our USD CAD trade. That our gold, now it was just crazy. But gold right there, I mean, we had just this nice massive move from 1680 down to about 1660. And then it moved on back up to 1685, and then now it's moved back down to 1670. All that this morning. Plenty of opportunity off the news to trade that one. And plenty of RSI reversals to call it in the process. So, over and over again, just a lot of good trade setups right there on gold this morning. And, you also could have hopped in and checked out some other ones. So, like, you could maybe hopped in and looked at The NASDAQ, I don't know if we're going to have time to go through that one as well. It had some good trades on it. You can trade the S&P. So let me see here. I'll pull up a couple things. We'll see what we get. And I got all these numbers and letters and reports on here. But so a lot of good trades on the NASDAQ. Moved down, literally touched it to a deviation. So perfect move right there. And let me show you this because, again, I just hope you're picking this up. All right. Lower low. Higher low. Then what happens? Reversal. Okay, so that you got that one deviation bounce. You got lower low, higher low. You got moving above the 8-day moving average. You have a solid, good trade signal right there. And so, I mean, just things to look at. You also have up here. I mean, this morning. Hit refresh. This morning, you have right here making new highs and making new lows. Look for a reversal. Boom. You got a reversal. Comes on back down. Okay, right there on the NASDAQ. So this is working over and over and over again. So I hope you're picking it up. But it's a very, very, very helpful thing. And again, you don't just go the opposite direction just because you have the RSI divergence. But the RSI divergence gives you a heads up that there may be one, like a high possibility that there may be one coming. Okay? And when you're going to do something like this, you need to have limited risk because, man, sometimes it'll just keep going. And you want something that defines your risk. And that's where Nadex comes into play. And so those were some of the major markets we were looking at this morning. Let's go ahead and check out a couple other things. What do we got tonight? Okay, so we talked about all the stuff that happened today. What do we have tonight for tomorrow? We got Aussie dollar RBA monetary policy statement coming out tonight, so you can check that one out. And you don't have a euro announcement coming out to block all the movement. Which is nice. That's sort of what slowed it down last night before it finally decided to move that one deviation. So everybody's waiting on all the European announcements to come out. So you also have current account coming out of yen. So that could be a decent, maybe a half deviation move on the yen. I'd probably be looking for somewhere between a half to a one deviation. Remember, it is going to be Friday, so they're going to be closing down. All right. So that will lower the impact of the report. That'll be happening at 7:30 tonight, though. On the Aussie, China's going to have their trade balance. That's going to add a little more volatility. So, again, half to one deviation on the yen or the Aussie. And then going on over and looking at, let's see, tomorrow morning. Nice. Okay, 8:30. Canadian, U.S. 5 reports. 4 of the 5 are all high-impact reports. You got employment change, trade balance, unemployment rate, all coming out of Canada, plus their housing starts. But the first 3 there all being high impact, and you got trade balance coming out of U.S. So trade balance. That's 2 high impact currency reports, and of course employment, health of the economy. So all those numbers coming out 8:30 a.m. tomorrow. That's probably the number one you want to be checking out. Looking for a move on the U.S. Canadian tomorrow morning, potentially Aussie dollar or U.S. yen tonight. And gold also is always fun to play with any one of these, but especially in the morning time. All right, I hope y'all have a great day, a safe day. I will see you tomorrow right here on TFNN. Stay tuned. We have another great show coming up for you right after this.